My next guest is an all-time AFL great, premiership captain and dual Brownlow medalist turned successful fund manager with his Cerutty Macro Fund returning just over 20% per annum. Chris Judd joins me now on the desk. Chris, I want to ask you primarily about crypto. I know nothing about it. I don't understand it. I know that the value of Bitcoin has plummeted in recent weeks, gone from 126,000 US to 90,000, in fact, less than 90,000. What's causing that fall?
Thanks, Rita. Good to be on the show. It's Bitcoin's an asset that's really sensitive to broad liquidity, financial liquidity metrics, and there are a few signs in the US that are causing concern around financial liquidity. So one of them is the standing repo facility, which is a facility banks draw on overnight when they don't trust the market to loan them money, and that's being tapped regularly by commercial banks. And then you've had a couple of credit funds have some issues recently in the US as well. So I think Bitcoin's price is responding to those sort of broad liquidity challenges that are starting to show their face in the US.
Now, for those who don't really understand cryptocurrency, what exactly is it? People say it's digital gold, it's internet money. Where does its value come from?
Well, yeah, I guess I'd encourage people to perhaps separate Bitcoin and all other crypto assets. And I guess Bitcoin was the creation of digital scarcity, and it was created by people who are anonymous, who believe that people's savings should increase in value instead of decreasing in value by 6 to 7% like they currently do. So, you know, for asset owners or people that own a house in Australia, they see their savings increase. But for workers that don't own assets and just have some money in their bank, that money is being debased by 6 to 7% a year. And, you know, that's one of the major challenges that society is currently facing.
So do you see Bitcoin as different to the other cryptocurrencies and a safer bet, despite the fact that it's had a 30% drop in the last month or so?
Yes, I mean, we're not crypto investors, so it's worth putting that out there, but we do spend a lot of time researching it because it's an important strategic
But your fund
asset.
doesn't invest in it?
No, we can only invest in listed securities, so you could get exposure to Bitcoin through listed securities, but we currently don't.
Okay.
Having said that, I think there are some really different things to Bitcoin and the other cryptos, namely the way that it's created. Bitcoin is actually mined using a truckload of electricity. So, you know, it might cost $10,000 worth of electricity to mine one Bitcoin. You mine a Bitcoin by solving an algorithmic problem quicker than the other miners, which is very complicated. So there's real-world implications. There's sort of a cost of production, which the other crypto tokens don't have, much like there's a cost of production for gold. And it's got huge network effects that a lot of the other tokens don't have. So I definitely would describe it as different, but I certainly wouldn't describe it as not risky.
Yeah. Is there a unlimited number of Bitcoin?
There's only only 21 million Bitcoins that will ever be created. The last Bitcoin will be mined in about 100 years.
Okay.
And the supply per year is now, I believe, less than 1%. So if you look at gold, increases in supply at about 1.5% a year. If you look at money, it's not, you know, we don't live in a world like Monopoly where there's a finite amount of money.
Yeah.
Money supply increases at about 6 to 7% a year. So the fact that Bitcoin is a scarce asset and the supply is growing far less than even gold is one of the things that the bulls will point to as why it's an important asset.
Now, I remember asking you about Bitcoin a few years back. If I'd invested back then, I think we'll say 4 years ago, what would have I made?
A lot.
A lot?
And I mean, that's what...
So even though it's got these huge fluctuations and it's volatile compared to, say, a term deposit, it has trended upwards.
Oh, I mean, it's a multi-trillion-dollar asset and it was created 12 years ago. So it's had a few 60 or 70% price drops since its existence. The difference between that and, say, tulips or other bubbles, once they have one 60 to 70% correction, they never rebound again like Bitcoin has. So even if you look at the US administration, where Trump's putting his resources, his family's investing huge amounts of money, so's Howard Lutnick, so's RFK. You go through a lot of that administration. I'd encourage people not to be emotional about it, where they even love it and think it'll solve everything, or hate it and think it's rat poison squared, to quote Warren Buffett. Just be open to it and explore it. Now,
you launched Cerutty Macro Fund back in June 2023. It's had enormous success, returned over 20% per annum after fees. well over the ASX Small Ordinaries Accumulative Index, which is around 10.5%. What's behind that success? How do you go about picking the stocks you back?
So we like to invest in listed companies that are exposed to sectors with large macro tailwinds. So a lot of our ideas come out of what's happening in the US. Things like upgrading the electricity grid in the US, things like increasing their ability to build ships. Currency debasement is a big theme, which we play, and we express that through gold mining equities, ageing demographics, superannuation flows. We don't try and hug the entire index. We just stick to companies where we feel they're in sectors that have strong tailwinds.
Now, how has someone who really doesn't have a banking or stockbroking background managed to outperform the market?
Well, I've been doing it for a while. So I was lucky enough to work for a VC fund after footy as an analyst.
Okay.
And then I've been doing this full time with my own capital for 8 years. So I haven't been reading it in a book. I didn't get taught this is how you have to do it. I actually learned the lessons myself with my own capital. And there's no substitute for being first principle thinker and being incentivised with your own capital at risk to learn some good lessons.
So you've put your own money into this fund.
Yeah, that's right.
That is pretty good incentive. Before you go, there's a lot of talk of doom and gloom in the Australian economy, people talking about productivity being low. We've got high taxes, red tape, all sorts of issues with inflation, and perhaps the next interest rate move is going to be up, not down. How do you see the state of the Australian economy, talking broadly?
Well, I think all those things are really true. The productivity numbers are horrible. There's been a chunk of malinvestment by the government, and the power policy is questionable. We're seeing shelter and power rise rapidly, and inflation has been stubbornly persistent. I would encourage people to view asset prices and the economy as two separate things. If we look at the biggest economic crisis since World War II, that was COVID. And all our asset prices ripped during that time due to liquidity. So we're bullish asset prices, but yeah, we think the economy is in a really tough spot.
That's a good point, isn't it? During COVID, we saw real estate prices skyrocket, and yet it was economic devastation. The economy had stopped.
So we talk about money supply increasing at 6 to 7% a year. In the States, over that 18-month period, it increased 40%.
Wow.
So it wasn't so much the assets going up, it was the thing measuring them decreasing by a significant amount.
Chris Judd, thank you so much for your time.
Thanks, Rita.